about Tata Consultancy Services, the long-awaited numbers, they have come out with their earnings. Let's straight away go to Reema Tendulkar for the analysis. Reema.
Thanks so much for that. Well, at least on the bottom line, there appears to be a miss. So the company has missed profit estimates by close to about 100 crore. 8,118 is what the company's delivered. On the top line, it's a figure of 39,854 crore, which is in line with what we were anticipating. So these are the only two numbers that we have as of now. A revenue growth of 2.25%. Margins have come in at 25%, and that will allay some, concern on the street because margins have beaten expectation. Let's quickly run you through the numbers. Rupee revenue in line, 2.2% growth seen on a quarter-on-quarter basis. Margins have positively surprised. They've expanded by nearly 100 basis points on a sequential basis. That is a beat. Profits, however, are lower than what we were anticipating, but that could be a function of the other income. The constant currency revenue growth has slowed down to 6.8%. Remember, the company has stopped providing constant currency growth on a sequential basis. So we no longer know what the quarter-on-quarter constant currency growth is. But if you look at it on a year-on-year basis, you would see at 6.8%, it's been slowing down for the last couple of quarters. If that chart can come up for you on your screen. At the same time last year, constant currency revenue growth was at 12%. In the March quarter, in fact, it expanded further to 12.7%, slowed to 10.5% in the June quarter. There you go. That is the trend graph of the constant currency growth on a year-on-year basis. And that pretty much gives you an idea that for the full year, the company is likely to end with high single digits. The current estimates in the street are closer to that 8.5% mark. Well, we are flooded with numbers. That was TCS, which we were talking about. HCL Technologies' bottom line has beaten expectations. It's come in at 3,037 crore. That is the only number that we have as of now. Revenue has come in line with estimates at 18,135 crore. So we'll await if the HCL Technology beat on the bottom line is on the back of a margin beat. If you look at it on a top line basis, the company has delivered $2,543 million. That's $2.5 billion. That is largely in line with estimates. You could call it a bit of a miss. The company has delivered 2.3% growth. We were expecting 2.6% growth. EBIT margin has come in at 20.2% versus our estimates of nearly 20-odd%. A lot of numbers which we're hitting, so let's quickly dissect it and keep it simple for all our viewers. HCL and TCS have both reported numbers. Let's first tackle TCS. TCS has reported a revenue growth which is in line with estimates, at least in rupee terms. However, the constant currency growth has slowed down further this quarter to 6.8%, and this would mark the third consecutive quarter of a slowdown in TCS's top-line growth. But there is a beat on the margins. The detail that we are awaiting from TCS is the dollar revenue growth, which they do give us on a quarter-on-quarter basis. So TCS constant currency revenue growth slows down for the third consecutive quarter. If we don't yet have the dollar revenue numbers on which we've based our estimates, but at a 6.8% growth on a year-on-year basis, it appears slightly lower than what we were anticipating because our poll was closer to that 7% mark. For HCL Technology, the company has reported a beat in terms of the revenue. 2.1% is the constant currency quarter-on-quarter growth. Margins have come slightly higher than what we were anticipating, an expansion of 25 basis points on a quarter-on-quarter basis, and there is a beat of close to about 7-8% in terms of the bottom line. So HCL Technology's numbers are looking pretty good. We need to see if HCL Technology has changed its FY20 guidance on revenues as well as margins. So HCL Technology numbers look pretty okay. On TCS, we're still awaiting some more details, but there appears to be a slight miss on the revenues and a bit of a beat on the margins. Let's get in some reactions. HDFC Securities' Amit Chandra is here with us, and in the studio, Prakash Diwan will also be joining in. Amit, let me start with you. First, if you want to tell us your thoughts on TCS.
Yeah, obviously seeing the first reaction on the TCS is that the revenue is obviously lower than the estimate. So we're expecting around 7.2% YoY CC growth, and it has come at 6.8. So this is the third consecutive quarter of YoY decline. which the company has also indicated about that, but the extent of decline is higher than what we had anticipated. And in terms of the EBIT margins, obviously the margin performance has been higher than what the street was expecting, and what the expectation that what we had, 24.3% was our expectation. So the main thing to watch out is the outlook of the company on the BFSI vertical, because I think the slowdown in the revenue is largely related to the slowdown in the BFSI and the capital market segment. Yeah.
Okay, just reading out, let's focus on TCS first. Rajesh Gopinathan, the CEO and MD, says, we saw the sectoral trends of the first half of the year continue to play out in the third quarter. Remember, in the first half of the year, the company saw a slowdown in BFSI as well as in the retail sector, and parts of the automotive manufacturing had slowed down, particularly in Europe. These were the big trends in the first half of the year, and the management commentary seems to suggest that that has continued even in Q3. That said, the robust order book during the quarter reflects our ability to pitch innovative technology solutions to address the business needs of different stakeholders. We still don't have what the order book figure is right now. What NG Subramaniam, or NGS, the Chief Operating Officer of the company, had to say, in a seasonally weak quarter characterized by furloughs across multiple industry verticals, we focused on execution while continue to invest in future growth. Having onboarded over 30,000 trainees in the first half of the year, we worked on driving up utilization in Q3 and had good outcome. Our client metrics were also very good. Just trying to get hold of what the other vertical, BFSI, that is a crucial vertical, and that has slowed down even further. So BFSI growth has come in at 5.3% this quarter, which compares with 8% in the prior quarter. BFSI too has been slowing down, so there is pressure in the BFSI vertical. Retail is another vertical that we were tracking very closely. I think retail in the prior quarter had a growth of close to about 4.5%, and that has seen a meager recovery. So retail growth has come in at only 5.1%, so not much in terms of a pickup seen in retail. So as you can see, BFSI as well as retail continue to be on the slower side, and that it has grown slower than the company average. I'm still trying to get hold of what we have the dollar revenue growth, and yes, it's missed our estimate. So 5586 is what the company has delivered in terms of a dollar revenue growth, and that would imply a growth of 1.25%. This has missed our expectations of 1.5%. So yes, TCS, there is a revenue miss, but margins have come in higher than estimates. There is a slowdown seen in BFSI and retail, which has continued from the prior quarters. We await the management commentary to see if that weakness has bottomed out or not. But as of now, in Q3, revenues miss, margins beat. BFSI and retail have slowed down further in this quarter, BFSI particularly. I think the order book would have been fairly healthy going by the management commentary, something that we had seen in the prior quarter as well. And I think the 9-month constant currency revenue growth for the company has come in at 6.9%. That is the 9-month growth that the company has reported, which means that considering that Q4 is also a seasonally weak quarter, the street could be paring down its full year growth estimates for TCS. And bear in mind that this would mean that it will grow much lower than Infosys as well as HCL Technology. Remember, Infosys upped its guidance for the full year to 10 to 10.5%. So assuming that they even meet the guidance, they would still be at 10.5%, which is higher than what TCS is likely to do, because TCS's 9-month growth number, I think, is at 6.9%. I'll get that number up to flash on the screen. But so that is one. So, Infosys full year growth will be more than TCS. Infi is likely to be at 10.5%, 11%, while TCS could be closer to that 8% mark. Even for HCL Technology, growth is expected to be higher, and in the quarter gone by, the company had upped its guidance. So TCS, it's been a bit of a muted performance. It has underperformed Infosys this week ever since Infi came out with the numbers. So since Infosys numbers, Infi rallied 4%, while TCS has been on the flatter side. But if you look at it in the last 1 year, TCS has still outperformed Infy, and it trades at close to about 18-20% premium to Infosys. Prakash, you have the numbers: revenue miss, margin beat.
Yeah.
As of now, from the management commentary, there is no clear sign of a recovery in BFSI as well as retail, which is imminent.
Yeah.
It's not happened in this quarter, but the commentary doesn't seem to suggest it's likely in Q4. And even in the margin recovery, considering their margins fell so sharply in the prior quarter, that recovery is still not
adequate enough.
Yeah. How would you read the margins? I mean, how would you read TCS's performance?
Yeah, so, the narrative seems to be very much within expected lines, but at the same time not very pleasant, for the simple reason, for TCS to have got out of, for it to get out of this humdrum kind of this thing, range-bound behavior, it would have needed much more, right? And as you said, 6.9% is not something to really write home about, especially when you have the incumbent or the contender in Infosys kind of revving up and building a lot of positive expectations around itself. My sense is TCS is probably more, because it's, the scale of the business is such that they take time to add on to their order book, and that they have done constantly for the last few quarters. So, for that to start converting into realizations on the revenue side, it might take some time. So, you'll have to give it probably another couple of quarters. The JFM quarter might not be the best to see that recovery. So the market will probably keep it discounted. Maybe Infosys moved up 4%. I wouldn't be surprised if in the next few days TCS actually loses about 2-3-4%, given how HCL Tech pans out. Because remember, we were talking the day Wipro came up with numbers. While the numbers look very benign, very boring, there was a sense of consistency around that play, and that's why, from a valuation perspective, it also gets as richly valued as HCL Tech does, in spite of HCL Tech being the cowboy of sorts. So I think these numbers are not going to be very great for TCS to break out of this 2240, 2220 zone and then move into some new territory. So let's get ready to face that reality of seeing it range bound for another quarter at least.
Okay, just one correction. The 9-month dollar revenue growth is at 6.9% and not constant currency revenue growth. So that is one correction that we would like to make. Moshe Khatri is also here with us. Moshe, you've had time to go through TCS's numbers. Your thoughts?
That's kind of interesting because up to 2-3 quarters ago, TCS outperformed some of its peers, and now we're going the other way. And I wonder how much this is a function of maybe one or a handful of clients that are actually triggering this weakness in revenues. Not a big surprise that financial services is not recuperating yet. This is a structurally problematic and challenging vertical for a lot of companies in the sector. Retail also typically is weak during the December quarter, so I'm not hugely surprised about some of those numbers, basically. But for Infy, I think the offset was very strong growth in digital. And I don't know if they've disclosed what was digital during the quarter in terms of growth rates and in terms of mix. I didn't see that.
Okay, we'll try and get hold of what the digital growth was for TCS this time around. Even I'm trying to get hold of it. But now between Infosys and TCS, Moshe, which one do you think people should bet on?
I mean, it seems that Infy's headed towards this magical double-digit top-line growth number that everybody's kind of aspiring to. I think TCS will get there as well. I think at this point, as I said, it seems that I wouldn't be surprised if these are a handful of legacy customers that are causing that weakness.
Doesn't look like TCS is going to get there this year because you only have one quarter to navigate. And so far, I think estimates are closer to that 8.5% mark for the full year. But that, of course, is on the back of much higher base. TCS had delivered an 11.4% growth in the prior quarter, while for Infosys, their base was much lower, so it's easier for them to deliver that double digit this time around. But that said, for those of you who've just tuned in, TCS has reported numbers. There is a revenue miss. Revenues have gone up by 1.25% on a quarter-on-quarter basis in dollar terms. In terms of margin, margins. The company has reported 25% margins, an expansion of 100 basis points on a quarter-on-quarter basis. The company has reported a 6.8% year-on-year growth, marking a slowdown for the third consecutive quarter. BFSI and retail have been muted for the company, and the company is likely to end the year. This is as per the investors or analysts we had spoken to prior to the numbers. So just put that on the table. The company is likely to end FY20 with a growth rate closer to that 8.5% mark, which would mean it will be less than that of both Infosys as well as HCL Technology. For Infosys, the company's guidance was in double digits at 10 to 10.5%, and investors thought that they were being conservative. So the actual estimates are closer to that 11% mark. And even for HCL Technology, we'll assess those numbers, but the guidance, the organic guidance, if you look at that, was closer to that 10 to 11% mark, at least as of the prior quarter. So TCS doesn't look like a great set of earnings, but it has underperformed and Infosys by nearly 4% so far this week, ever since Infy came out with the numbers, but it's still trading at a valuation premium. Still awaiting some more details like the digital growth this time around, the deal wins that the company has reported. Sandeep Agarwal is also with us. Sandeep, any more, your thoughts on TCS's numbers? You've always maintained that Infosys is a better bet, it gives you more risk reward, but you like TCS on the whole as a company.
Yes, I maintain that stance that, TCS is a market leader and they are doing extremely well on the capability and execution side. But obviously, there is a huge base which TCS has. And Infosys has a additional delta of, taking the cost last 2 years very significantly in their books. So obviously the EPS growth, I am very confident that Infosys will continue to outperform TCS. But I don't think there is anything except that valuation premium which TCS commands, which should make investors cautious. So the valuations are very high. That is the only challenge in TCS.
But right now, TCS is trading at a 20% premium to HCL Technology. Should it continue to trade at that?
I don't think, people do an apple-to-apple comparison between TCS and HCL, but I would say people do an apple-to-apple comparison between TCS and Infosys because of the size. So there, I think that, the premium should definitely come down, not necessarily that, TCS multiple should fall, but more I think that Infosys multiple will go up. That is the way I look at it.
What is your estimate of what TCS is likely to deliver this year in terms of EPS as well as revenue growth?
So we are expecting TCS EPS for current year. You are asking FY20, right?
FY20, yes.
So we are expecting, just a second.
Okay, what about the revenue growth?
So revenue growth we are expecting around 8%. 7.58%.
In constant currency terms, it would be 7.5 to 8% for TCS.
Right.
And
yes.
For Infosys?
For Infosys, we are at 9.5.
So lower than the company's own guidance.
No, so guidance is that much only, right? So they have now narrowed the guidance to 10.5, but
yes.
There is an impact of cross currency also. So because of that, we are at that number.
Okay, so you're giving us the dollar revenue growth numbers.
Yes, yes.
And what should the valuation, this gap between the two be?
So we assign 10% premium to TCS. So we value TCS at 22 times and Infosys at 20 times.
So there is scope for Infosys to go up by nearly 10% to bring down the valuation gap.
Yes, that's what I'm saying. So Infosys has more run-up and TCS will have comparatively lower run-up from here. That is the way we look at it because of, superior earnings growth for Infosys versus TCS.
How would you read the persistent weakness in BFSI as well as retail, Sandeep, that TCS has reported?
So, we have mentioned time and again that, there are certain clients in the banking space which are going through some tough times and this type of problem persists for 2-3 quarters. We saw LTI coming out of that problem in this quarter and reporting a very strong number. So I would not be surprised if, you see a big revival even in BFS space for TCS next quarter or maybe in the April to June quarter. So I don't think these are any structural or any big worries. They are smaller worries and, sometimes they impact the revenue growth for a shorter duration. So as I said, TCS is excellent management, excellent capability, excellent execution. Except for premium valuation, I don't have any issues on the stock.
Anything in the internals that you would like to flag off for Infosys that we've missed talking about?
On TCS, right?
Yes.
Yeah, so right now the numbers ex of America are looking good. The growth is quite decent, and also they have done a commendable job on the EBIT side. It has beaten estimate by almost 40-50 basis points. I think that is a very good number, and only thing is that there is a little bit of weakness on the growth side, which I think is more driven by the US market and the BFS space. So that I think should recover in next couple of quarters time.
Okay.
That is the way I put it.
Sandeep, do stay on. I want to get your thoughts in on HCL Tech. But before that, just one final word from Amit Chandra on TCS. Amit, how do you expect the stock to move in the near term? TCS?
Yes, see, as it has been mentioned that the valuations is the only concern in TCS. So with such high valuations, the kind of moderation we are seeing in growth rates, I think that the valuation gap between Infosys and TCS should actually come down. And the stock movement, I think it will be more of a slightly negative reaction, to the stock based on valuation. Yeah.
So you expect TCS to fall in the near term?
Yeah. So we have a neutral rating on TCS, and yeah.
That's the management of TCS. Before we cut across, we'll just quickly analyze HCL Technologies numbers because those are looking like a good